Is that right, Zeal? Zeal says, my webinar from last Friday was the most viewed last week. Holy smokes. Well, I'm sure you guys are there backing me. I appreciate it. So thank you for being on my team. Well, you know, Sam is a very good speaker and well regarded. So that is something cool. So yeah, non-farm payrolls, that's a big one that I've been doing at FX Street for 8 years, something like that. And that's usually the big one. That's their most popular webinar at FX Street. So that's that. But our TradersWay strategy sessions are very new at FX Street, and to have it be the most popular of the entire week is is no easy feat. If you think about it, over the course of the week, over 5 days, they must have 15 or 20 speakers. So head on. So that shows your loyalty, and I really appreciate it. So thank you for that. Thank you, Zeal, for sharing. The viewership record, no, I don't know if I'm shattering it. I do believe I have the all-time record at FX Street, 1,100. And that was long ago. That was like 7 years ago that the webinar software company that was hosting the webinar for us, their ISP went down. The ISP went down, not even them, not even their server, their ISP went down. It was pretty funny. We just overloaded it because back then the technology just couldn't handle that. So pretty interesting. But anyways, let's get going. Let's make some pips, eh, Brew? Okay, today is Thursday, April 30th. Is tomorrow May 1st? Look at that. All right, wow. Whew. Amazing, huh? All right, so today is the last day of the month, which really isn't that important. The third Friday of the month is more important than the fourth, but anyways. 2015. My name is Wayne. I'm the Chief FX Market Strategist for TradersWay.com. We meet here every day, or Monday through Thursday, 7:30 in the morning, which is approximately London lunch. And every Friday, as we just were discussing, our sessions are at FX 7:30 in the morning. Well, today is a pure technical analysis day. Let's just jump into it, huh? Just want to remind you that trading is risky and not appropriate for everyone. Your past performance, good or bad, is not indicative of future results. So if you're having a great time, tone the ego down. If you're having a bad time in your trading, remember to try harder and work harder, and things improve. And then, of course, stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. And what do I mean by that? Let's just very quickly, why do I say that every day? I'm actually saying it to myself as well to you. I'm reminding myself that if you look at the mathematics of trading history, today should not matter at all. Okay? The only reason today would matter is if I had a huge winning day or a huge losing day. And either way, huge wins and huge losses come down to risk. Because profit is inherent of risk. The more risk you can take, the more reward you might make, but also the bigger you may lose. So if you're doing things right, when I say stay small, stay humble, focus on the long term, what I'm saying is get rich slowly, make your money through compound interest, and don't try to speed up the process. If you don't like being a currency trader, you should probably quit. If you like being a currency trader, then just sit down every day, go through your charts, do your job, enjoy what you do, take pride in your work. And on the long run, you'll make too much money. One interesting note, if you pay yourself, let's say, what you should be doing at least is, let's say you take 50% of your profit and you pay yourself, and you keep the other 50% in your trading account so that your trading account grows, and you can slowly take larger lot sizes and make a little bit more money each month. At the end of the year, you will have 50% of all your monthly profits, and hopefully each month the profits get a little bit more on average. But if you paid yourself 20%, or let's say 25% every month, and saved 75%, you're paying yourself less every month, but by the end of the year, you'd make more money. Because your account size has grown that much faster, compound interest. So the less you pay yourself, the more money you're get at the end of the year. What a paradox, huh? So anyways, stay small, stay humble, focus on the long term. All right, so yeah, what's going on in the world of euro? It's not a euro story, is it? It's a dollar story. Traders have mistakenly expected the Fed to raise interest rates soon. Well, that's all it is, Buzz. And we actually talked about it before it happened. Traders expected the Fed to raise interest rates this spring, and they're like, no. It's going to be March, and then they're like, no, it's going to be June. No, now it's September maybe, right? Well, when market participants expected the rate increase, they were that expectation. Because if the Fed raises interest rates, the dollar will get strong. So they're like, oh, the Fed's going to raise, they're going to raise. Which I think is an example of efficient market hypotheses as being flawed. Right? That, sure, all known information is priced in, I agree with that. But this idea that all traders are rational? Yeah. Well, in this case, let's say they were even rational, they were still flawed in their analysis. So anyways, the dollar was overvalued. Who cares? So what? Now, yeah, we were at what was the level, 104, 105 basically? I was hoping 110 would hold. Nah, it didn't hold. So, my alpha, okay, my way to beat here is to just keep looking for areas in which I would like to sell. Now, we see in here, we have this, sell the euro here. That was funny a long time ago, and we're through that area. But we do have this, I believe it's a 786 on top of the expansion. Let's get, we have this expansion here. And, it's predicted to come up. It's also the 786 here. So it's not a bad place to sell. If that's not it, I'm still going to look for other places. See, what I don't think we'll need to do, and this is just sort of a gut check, I don't think we'll need to measure this wave. or I don't want to call it a wave. This move. It would take all summer. In that case, well, I guess at this rate it wouldn't take all summer. But in that case, I would still consider selling way here. So all I'm playing right now is this area here. Okay, up in here. Okay, I don't want to get higher than that, so this is sort of my sell the hell out of the euro in here area. I'd like to keep it below the 786. What I'm saying by that is I want to get below this gray area up here, which is the current high. I don't want to make a double top off of that high. I want to make a lower high, because then it's still a lower low. Yes, it consolidated, 3-wave correction, and then 5 waves down, right? Okay. Just want to make a quick comment here. Jenny says, sir, if you have time, can you look and see if there's a short opportunity on British pound? I'm probably not going to put you into a trade. We can discuss the conditions and bulls and bears and all that kind of stuff, because I'm trying to teach, and I know you know that. The second thing is, generally speaking, that is in a huge uptrend in which we predicted. So you're looking for a shorting opportunity. Yeah, there might be one there, but I would rather you in uptrends. Now, there is sort of a topish thing going on up there, right? So maybe, but, you know, maybe, just careful, okay? I'd rather you let it reverse and then catch the new trend down instead of being a reversal. But anyways. Guys, let's try to keep it below this area. I know we're already touching the extremes of that area, but that's how it goes. Okay? So basically down, 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 3 with, and then down again. Okay? The only thing is, the way that this is set up is I can't confirm, or let's say predict. I can't predict that it's going to make the lower low. I would like to, but that we're talking parity now if it does that. So your technical analysis is about the closer you get to parity because of the psychological aspects. The 3-wave correction would predict the lower low, but the price action doesn't, because it's made a higher high. And the high won't predict the lower low until it's made the lower low, which is probably going to mean consolidation in here, which means a big drop, maybe a retest, then a lower low, and then we're going to be in here, and that's going to whip out, and that's going to come up. And okay, so how about consolidation? I hate predicting stuff like that. Hey, look at all the news coming up, guys. Personal income, personal spending, weekly initial jobless claims. PCE, another important one. Look what's about to happen. What does this piece up here represent? Well, actually, that's where the stop is. if you were short. So if it goes much higher than that, PSI is going to say, whoa, 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 whoa. So let's look at Piggy. Well, just to take profit, actually what it's saying is if you're short, you need to get out. That's actually what it's saying. It doesn't say anything about taking profit. Because it's suggesting where your stop would be. So if it's above price, then you're short. Living like a mole, digging in the hole. All right, so we're still in this area here. Let me try to clean some of this up. Yep. All right. So Jenny wants short. Jenny's got a short. Jenny's got a short. Tell me, what did you do? All right. Yeah. Okay. Well, first part of the would be are you at support? You're at resistance. On a 4-hour, kind of looks like a double top. Okay. If it does drop, it's only going to drop to the 21 on the 4-hour. Okay, fine. What do the oscillators say? Well, Miggity Mac Jump still says it's bullish and shows that the angle and set between the 21 and 55 is still very, very strong. If you were trading the MAC, you would not short. It might come down, but you're being way too aggressive according to Miggity MACD. According to stochastics, which, okay, let's just define these things. MACD measuring overbought and oversold conditions for the market. The market's still bullish and very bullish. Okay, so you're taking a high risk shot by selling at resistance because the market hasn't reversed yet. Price action, however, says, yeah, it's overbought and it's starting to fall. Yeah, go for it. Well, what you're trying to do is line up price action with this. Right now, they're not aligned. They're not congruent. So you're taking for market, and that, by definition, is more aggressive. So you better be sure what you want to do. What it means is you might be right, but it'll be short term. If you waited, for example, so you got this double top, but how about a bigger double top? So let's say it comes down to the future 21, okay? And then up to the top again. And then, okay, and then so like, what would happen between the 21 and 55? The angle and separation would flatten. This would flatten out, and the 55 would get closer. That would bring the MACD around. Okay, it would cross, which just means they're moving closer together. But they won't drop below the water line because the 21 will still be above the 55. So that shows sort of a head move. Okay. And if you did all of that, it would have a stochastic cycle, which would have this come down. So let me just draw that. Okay, it would come down to the 21, so that would do this move. And it would go up and triple top, which would be that move. And then that would be, like I said, a triple top or a lower high or something close to that. And then it would start to move the next cycle down. that would be a trade at almost exactly the same price with much, 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 much less risk. Trade, same price, much better probabilities in your favor. Because if you shorted here, look where price is. It'll be the exact same price. Just a lot less risk associated with it. Okay, yes, you are at resistance, but remember, that's not everything. That's just where we start. Boy, nice moves, and then too big. Yeah, there's all kinds of signs of reversal here to the upside. So you better be very cautious selling this thing. What was I teaching you this yesterday or the day before? If it makes a higher high, let's say it does this, what should you do immediately? Think about hammocks. Battle stations! Battle stations! Thank you. You say, aha! High, high. So, plausible change of brand, right? Tell me what they do. It's Jamie's last I owe you. Okay, that's kind of the new channel, and because of the higher high, you would fib it, and you would prepare now. Come on. Okay, I'm not suggesting the channel. I'm just kind of giving you a visualization of, instead of the trend down, the trend being slightly up, right? And so if it made a high, to do as a technician, prepare for that. Okay? So that's why I'm saying, shorting here is, all right, I mean, it's fine, but wait for it. Set it up. Okay? Remember, we don't make our business, gambling. You don't want to say, I bet you it's going to fall here. You want to get all market participants involved. So how am I doing with the CAD dollar price action predictions? I don't think it's that bad. See how slow it's been moving? But I think this is a very clear. You notice that there's no moving averages on this. Very, very simple up here, because I'm not really using these oscillators. So this is like a naked trade, right? And it's just moving along, doing its thing, nice and slow, giving you, what, 75 to 80 pips a day? Easy peasy lemon squeezy. Yesterday could have been a retracement. Maybe it's today. But the part I like is it's really simple, very straightforward, very easy to understand, right? And when we're in The range, it was fairly easy, you know, buy it red, buy it green, sell it red, buy it green. Oh, then breakout, retracement, sell here, moving on. Cool. Okay, stock market is on today. It's Thursday, and I think this is Monday's plan, right? There's this one in here. So it'd be interesting to see what happens. Next one, the Alamo on this one is down here. If it goes lower than that, I am not going to feel very comfortable. I'm going to squirm in my seat. It has a little more downside that it can do. It muddies things up for months. So I don't want to deal with that. I'm not emotionally prepared. Okay, anyways, let's back out here. What's going on? This is pound yen at resistance. Yeah, we already identified that days ago. Oh yeah, uh-huh. Okay, this is all pretty straightforward, right? Jenny's got a plan. Tell me, what will she do? The pounds, Jenny's, I owe you. All right, yeah, so just, I don't know, it's resistance, right? So, where do you want to sell here? Gee whiz. Same thing on the pound, like you could sell on the pound dollar, it was similar, right? You could sell here, but you're betting. So this is a 4 hour. Does this look bearish to you? No, it looks bullish. Oscillator, right? But you don't use oscillators in trends. So we're well above the 21. This is very, 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 very bullish. So on a smaller time frame, maybe, I don't know, let's check the hour. At least it's a double top with divergence. You see that? Okay, double top. Oh, it's hard to see. Hang on. Come on now. Double top, the exact same time, divergence. Okay, that's weakness. So, and the 55 is in control, which predicts this double top. So on this smaller time frame, you could consider putting together at least a medium-term trade plan. Now, we're on a 1 hour, and we were looking at a 4 hour. This is the 200 EMA. What's the 200 EMA divided by 4? It's 200 divided by 4. So it's going to go down for 55, which is here, but that's moving up. So this will drop. So therefore, with that price action work, down to the 21 one more time, and then up a little bit, and then down to the future 55 on the 4 hour, which puts us, I don't know, what do you want to sell at 84, target 82? 4 hour 55. And then, of course, the 4 hour 55, if we drop down to 82 and hit the 55, it's going to predict going back up to approximately and then dropping. And that would be a change in trend. I'm not saying it's going to happen, but that's what the technicals is. Now, remember, the technicals don't create trends. They just put you in and out of trades. So, you're going to get a reversal. You're going to have to ask what market conditions are going to need to be created to have that. Well, the British pound would either have to be very weak, the Japanese yen would have to be very strong, or both. Okay. So you'd have to think, well, what's going to create that scenario? So it seems to me euro's still pretty strong. All the commodity currencies are weak. Dollar's weak, yen is weak, pound is weak. So I guess the other way of looking at it is euro's quite strong. Lots of people were much too net the euro dollar. Strong relative to everything else on the planet. It doesn't mean the euro's people are buying the euro. It means they're exiting shorts, and it just happens to be because they were so, net short euro USD. Okay. So euro pound going up, euro Swissy sideways, euro Kiwi up, euro Aussie up. So what can we learn here, not regarding the euro? What does this tell us? And I'm not talking about euro. What else did we learn besides euro? All right, how about this? Type in a question mark. When I ask questions, I'd like you to answer. And if you type in a question mark, I learned something. I learned what you don't know, and my job here is to provide you with knowledge, so I kind of need to know. Also, question you don't respond, maybe I think you don't care. And really, it's just you don't know, and you probably should know. So it's a good thing to do. Right. Swissy is quite strong. Okay. So yes, euro strong, but so is Swissy. So I'm looking at two things if we recall our lessons from Tuesday. One, I'm looking at correlation. Is the euro strong, yes or no? Yes. Two, relative strength. Swissy is also strong. Cool. Okay. No, Kiwi, not compared to euro, Kiwi is very weak. Okay, there's your Kiwi Swiss franc. Sucks. Okay, commodity currencies are way down today, guys. Aussie's way down, CAD is way down, Kiwi's way down. Okay. Maybe the decline in the stock market. Okay. Think about it. Fed's not going to raise interest rates anytime soon. For everybody thought they were going to raise interest rates pretty soon. Then they're disappointed. They need to readjust or rebalance their portfolio. What does that mean to those that thought raise interest rates soon? Well, they thought the economy was doing better. But what else? Well, if the economy is doing better, then eventually, then that must speak volumes for the global economy. and future demand for things like commodity. So, we're betting on the Fed raising interest rates soon. They're probably making a lot of other bets, and all of a sudden they're like, what? The dollar's not going to get strong, the global economy is not improving, and all of a sudden they got to remove all their bets. So commodities are going to be very sensitive to this type of news. We also know there was tons of, Kiwi news on the calendar, right? I mean, we talked about it on Monday. Boo, 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 boo. Let's take a look at the yen. Okay, the euro yen is going up. The CAD yen, and this one's sideways. So I see the yen as being weak, but these other commodities are even weaker. Euro yen going up just nicely, right? Let's double check our. I want to make sure we're all looking at the same thing here. Okay, when I look at this, what am I looking for? First thing I'm looking at is correlation. Are the yens now, just on the right side, are the yen pairs clearly all doing the same thing? Yes or no, guys? I want an answer. Are they all clearly doing the same thing? No. Pound yen sideways, Aussie yen way down, CAD yen way down, sideways. Euro yen going way up. Does that look like they're jumping in the canoe? No. All I see here is super weak Aussie and super strong Euro. So what's the trade of the day? Boom, 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 boom. Boom, boom, boom. Yeah. Yeah, look at that, huh? Don't you turn your back on me. I won't be ignored. Yeah. Hoo-ha. Okay. On your marks, get set, go. Draw the MACD. Could you do it? You should be able to. If I gave you this chart, you should be able to draw the MACD. Okay? Angles of separation here start to diminish. That means there's a crossover between the moving average and the moving average of the moving average, D line. Here the 20 is above the 55, therefore the MACD indicator crosses above the water line. Continues above the water line. Okay? Here the two lines narrow a little bit and maybe even cross a little bit, and then they cross back up and expansion, expansion, expansion. A little bit of narrowness, so they narrow again and maybe even cross a little bit, and then boom! MACD going through, moving farther and farther and farther away from the water line. Oh, just like that. That should be easy, guys. Amateur hour. It's one of these things, right? Like, if you can't draw what the indicator's showing, then maybe you don't know what the indicator's telling you. And therefore, why are you, risking your family's life savings on something that you... Does that bother you? I use the ADX. Really? What's the math? Well, I don't really know. Yeah. So I put it on, like, if you find indicators that you like, let's say you like ADX, you're like, this just feels good. I just don't know why, but I like. Then if I were me, I would go immediately to Amazon, find 3 or 4 or 5 books on ADX, and I'd buy them all, and I'd study them for days, maybe weeks. And I would become the industry expert in ADX. And I'm not joking. I'd become a world-renowned expert. Demeter asks a very valid, do I have a list of books? I've read almost no books. Early on, I did buy some books, and they were not very good. They're like wishy-washy. So I'm going to give a shameless pitch, but it's not. I'm not doing it on purpose. One of the exercises I did early on when I was a new trader is when I did buy a couple, and they were completely worthless. Not even, no help, no nothing. I mean, just nothing, just absolute nothing. Okay, so I decided, well, I should write my. Not to sell, not to put on Amazon or something, not to get published, but I'm like, I'm going to write my own textbook, and I'm going to do it because I will need to do research, and then when I do the research, I'm inevitably going to bump into things during the research process that I don't know. But at that point, I didn't even know what I didn't know. Like, I didn't know what I was missing. Okay? I didn't even know what I didn't know. And so in that process, I did bump into things, and I write it down. Okay? I would write it down. Like, what is that? What does that mean? What are they talking about here? That would be on this research topic, right? So I had this big list of all the things I didn't know as I was researching the things that I thought I knew. All of a sudden I had this huge list of all the things I didn't know, and then I would research those things. But I started trading so long ago that my first brokerage account, and probably my first, second, and third brokerage accounts, didn't come with. I mean, this was a while ago. Okay, so that's kind of what I did, and that sort of led to my own book. And it's a comprehensive book that does technical analysis, fundamental analysis, but more importantly, like half essentially traders like. But besides that, honestly, I don't know because I haven't read anybody else's book. So it's not really a shame plug. It's just sort of how it worked out. Now, my book's old, but, there's a lot of, it's a pretty honest book. Like, you'll see things where I say, and very bluntly, I'm like, when I first started trading, I sucked. That's what it actually says. And then I worked harder and harder to improve, and over time, I sucked less and less. I certainly don't say I'm the world's greatest trader. I just had to work my butt off, blood, sweat, and tears for years, and eventually I sucked less. How many times have you read a book like that? And then I said, well, let me show you all the things that turned it around for me. Things like how to actually use a trade journal, not keeping a trade journal, but how to use a trade journal, how to practice, how to center your mind, how to focus on identifying your strengths and weaknesses, so on and so forth. So, Edwin jokingly says he has a chance, but isn't that the whole point? So, anyways, yeah, I did write it. I have carpal tunnel syndrome from writing it. I still have pain 7 or 8 years later. I still have pain from writing that book. And it has been said it was the first book ever written by one of the reviews on Amazon.com. And I feel sad by that because, you know, I would hope that at least one book was worse than it. But, yeah, and others actually liked it. Between the best book ever written and the worst book ever written, but it's the truth, and it's honest, and it's clear. I think it's clear. But anyways, so you know, I don't know. I'm sorry I don't have a specific answer, but that's how it worked out. You know, there was very, very few books really on Forex. I think the first Forex book that was widely purchased for retail traders was Forex Made Easy. So again, when I first started trading, there were very few brokers, and the brokers that did focus on Forex, first of all, they're all started by the people. These have been bought up or gone out of business and all that kind of stuff. The first 4 or 5 Forex brokers in the United States were all started with each other. But there just wasn't much out there, so the first books on Forex for retail traders were basically by scam artists. Honestly, that's why I don't have an answer for you. I mean, it was charlatans that were disseminating information, and the rest was a secret for a big banker. That's what Forex. So anyways, I'm just getting a look at some of these markets. Yeah, some pretty big pullbacks. Yeah, Demeter. Yeah, Demeter, I would focus on strengths and weaknesses and then doing whatever it takes to turn a weakness into a strength. So, like, let's say you just don't get oscillators. The opposite of, you know, loving ADX, and momentum indicators and stuff. Then I would take the time and master one thing at a time. And I mean, like, maybe trade ADX for 3 months straight and find out whether you like it or not and read books on it. I'll give you another example I've done. It used to be common knowledge that you cannot trade on a 1-minute chart. I don't know what the common knowledge is now, but this must have been 6 years ago, I guess. It was common knowledge. Everybody knew you couldn't trade on a 1-minute because it was only noise. But then the 5-minute chart, well, I was using the 5, but what's the difference between the 5 and the 1, you know? And then back then I used this was DFT way back when in the United States. Now it's long gone, but anyways, their charting package allowed you to use 3 minutes. You could use 1, 2, 3, and then 5 for some reason, 04, right? So I started using the 3-minute chart. And I'm like, you know what? It's a little fast, but there's something here. there's something here, like I'm trading well with it, but you have to, tweak your strategy a little bit, but it's working. I would end up the 3 minute with the 5 minute, and I'm like, the 3 minutes a good heads up when I'm already waiting for the five, and I'm like, there's something here. So I said to myself, all right, it's common knowledge. Everybody knows you can't trade the 1 minute charts. So I am going to trade the 1 minute chart exclusively. And I did that for 1 year. So I'm silly that way. I'll give you another example. I used to run a small business in San Francisco a long, long time ago, 20 years ago, whatever. I'm standing in line with Starbucks with one of my employees going out for a morning coffee. And some guy orders in front of me, he says, triple grande soy latte. I'm like, soy latte? And here, this is how you know I'm a country bumpkin from Canada, right, from Saskatchewan. I'm like, they make coffee out of soy? What will they think of next? The guy turns around and he's like, no, no. Are you stupid or something? No, he's like, no, you use soy milk. I'm like, soy milk? Why would you do? It's just better for you. I'm lactose intolerant, and it's just, and it's got some extra more calcium milk, and he starts rattling off all these reasons. I'm like, well, does it taste any good? I asked it. And he said, well, it doesn't taste like milk. It takes a while to get used to. But once you like it, you like it. And I said, I'm going to drink every single day for the next year, and then I'll decide if I like it. I swear to you. So I'm like that. I'm like the 1 minute chart for a year because people say I can't do it, and I've figured out how to do it. But did I read a book? No. Okay. So, yes. So, yeah, we've just been chit-chatting, huh? Do we see amazing dates going on right now? I think we're in that lull of like, what happened yesterday, right? This is sort of like a hangover morning. So, we're hanging in, right? Just still sort of in that zone. Let's go into a closer chart, 15-minute chart. So now we're sort of we're still in the fib area. Okay, we're riding the top, which I drew down in here. I think when I drew this, we were still inside, right? And now it's still following it, which is cool. And if it's going to turn bearish again, this is, you see the 618? It can go up 786, I'd rather not. All right, so I'd like, if this was going to come down, I'd like this to diverge a little bit, which that would do if it rolled over, so on and so forth. Oops, we need to do that. Okay. And any higher than that, it's pretty high risk stuff if you're a bear. So I think a lot of these trades you can make. Going back to like the $1 one, if you're going to do it, realize it's a short-term trade, and don't be afraid to take profit. The next trade, like I showed you after the lower low, lower high 1, 2, 3 scenario, the next trade would be something that you hang on. Okay. The next trade you would hang on to. You understand? So the first one, like you take your money and run, and then the next one you hang on to and let it fall, let it run. Okay, don't take the money and run, let it run. Yeah. Demetrius says jobless claims minutes. No, what I said is it's PE that matters. Okay, it's PCE that matters. Personal consumption and expenditures. Okay, market is telling me it was pretty good. And the reason the market reacts like this is because the Fed uses PCE probably more than GDP. Okay, so the GDP number that came out poor, you know, what did the Fed basically do to the poor data? They kind of said it's all weather. Oh, it wasn't good? Like it's good. They do watch personal consumption expenditures. Is the economy going to improve if people don't spend money? Probably not, right? 70% of our economy in the United States is consumer based. Can the economy improve when people's opinion is? Sure, totally can. Who cares about people's opinion? Hey, Mr. Consumer, do you feel confident in the future? No. Why is your Walmart shopping cart full of garbage? Why did you buy a 37-inch LCD TV? I don't know, right? So, opinion, spending the money. So, like personal expenditures would probably look at. They wouldn't ask the opinion. They'd just count all the shopping carts going out of Walmart, right? So, anyways. What time is this? Yeah. All right. So yeah, slow roll over. I'm going to move stop closer. That's it. If it makes a higher high, I don't want to be short. You know what I'm talking about? Oh, caught on the bottom of the channel. Still moving along. So you could be trading binaries as a really like scalping with binaries. Has anybody been practicing that? I spent about 2 weeks showing you guys how to scalp with binaries. I think we were like 9, we'll trade 11. Hey, buddy. No? Holy, oh, yeah? Right on. I enjoy them. Yeah, Daniel likes it, yeah. Well, we can always assess that. Eric, are you going to be at webinar at FX Street? Yeah, cool, Mike. Because I'm just suggesting, if you're going to be there, just ask me, and we just do binaries. It's kind of late in the day, right? now. But if you guys are going to be there, just ask and do things up on a long-term chart. Edward was, yeah, yeah, they're there. Let's see. Let's just trying to find a browser. Well, my PC must be slow, man. Holy smokes. Still haven't rebooted. Said 2 weeks ago I hadn't booted my computer and it was running slow. I still haven't done it. Okay, so you go to youtube.com/c/a for our YouTube channel. Okay. I like this one on ridiculous, sickening work ethic. You guys remember that? Every time I see it, I like it. I was thinking maybe getting like a tattoo or something. You know, it would say ridiculous, sick work ethic. Here's the one on break out the math. Calculate the money supply, the change in money supply based on the money multiplier. How to trade scalping the euro, and then press conference, retail sales. So there's another scalp off retail sales. Another Monday session. Binary options trading webinar. Focus on the long term. Here's one. Live binary option trading, 6 profitable trades in 45 minutes. That's one on for scalping. Where I think that one I wasn't feeling very good that day. I'm like, you know what, guys? I just don't have it in me lesson or big rah-rah speech. So let's just scalp. So we just went through and just started scalping for 45 minutes. Just bang, 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 done, 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 done. Put a link here if you want to check it. Now, again, if you watch these videos, leave a comment. Okay? Seriously, leave a comment. What's wrong? Why can't you leave a comment? Oh, hang on. You can't leave a comment? You can't even say thank you? You're raised by wolves, maybe? That's what your mama would feel proud because you can't say thank you. So, anyways, all right. You know, I don't know. There's 70 hours of videos now on YouTube for you. 70 hours. Yeah, this is a start, right? Hey, let's call it a day. The news has come out. Things are moving. You should know what to do. USD yen is moving up. That's looking really nice. Euro USD is coming around. Yeah, maybe this is the pivotal point in the sense that maybe the dollar stays strong from here. I hope, because you know that's what I'm looking for. And I keep telling you, hey, Euro USD is going up. So what? I'm going to sell it. I just don't know if it's today or tomorrow. And then what's the second thing? Let it reverse. And once it's reversed, then go crazy. Right? after it's reversed and the trend is now down and you're a bear, then start selling like crazy. You got to be careful. If you're a bear and you just blindly like sell at this resistance, sell at that resistance, sell at that resistance, actual real reversals. And if you do that, what happens is you end up giving away the profits you're going to make when it actually is trending. When I was a VC, we'd always talk about keeping your powder dry. Save your money for the proper market conditions, right? Anyways, let's go, yo. I'll be at FX Street tomorrow for you guys, 7:30 in the morning, Wall Street, London lunch. Peace on earth, may the pips be with you, may your profits be above average, and thank you very much for being a trader of, a client of TradersWay. See you tomorrow. Ripper. Trade your way at TradersWay with Trader Wayne.